Do you know who is Adam Back? He's one of the original Bitcoin pioneers and the CEO of Blockstream.
In developed countries, Europe, UK, you mentioned North America, Japan, other kind of developed countries in the world, people don't really have that much problem getting access to transacting. They have debit cards, bank payment apps on smartphones, and maybe they're not really feeling inflation that much either, right? Whereas the emerging markets, people don't have a bank account, maybe they don't have enough documentation to get a PayPal account, they're disconnected from the global economy. So for them, Bitcoin becomes a very amazing thing, a way to get connected to the rest of the world.
People don't want to tell everybody how much money they have got, how much money they spend for that. They want to protect their identity, which is another big asset that people have, and they obviously want to protect.
Some investors would sell gold ETFs. And an interesting thing about gold ETFs is that 1.5% of the total gold is actually in ETFs.
Adam helped lay the foundation for Bitcoin and its proof-of-work system, and is driving its future as a global decentralized standard. As Bitcoin gains mainstream traction, Adam will share his insight on preserving its decentralized, permissionless nature and discuss his vision for where Bitcoin is headed in the evolving digital landscape. Remember that the content on the show is for informational purposes only and not intended as financial advice. As always, do your own research, level up your skills, and be accountable for your decision. Adam, amazing to have you on the show. How are you doing?
Good, thank you. Thanks for having me on. The Bitcoin market is finally turning around.
So let's maybe start with one of the predictions that you have made about Bitcoin. You think we are going beyond 100K? What's kind of like target that you have in mind for this cycle?
I was thinking an interesting potential target is parity with physical gold. With gold. And of course, it's a moving target because when there is financial difficulty or uncertainty, central banks also hedge by buying gold. So gold will go up. But if the gold price was to stay flat, Bitcoin would have parity, like market cap parity, around 850,000 per coin. And I think that there is some indication that as Bitcoin is adopted, that some people might start selling gold, i.e. that, Bitcoin getting in the news, having a big adoption phase, investment coming in, that some investors would sell gold ETFs. And an interesting thing about gold ETFs is that it's only, I think, about 1.5% of the total gold is actually in ETFs. I guess the rest of it is physical and custodians or held by governments and that kind of thing, plus individual ownership of gold in different forms. So, and that point there is that price is set at the margin, so it's only really the people that are buying or selling that are influencing the price. And so if people, if newcomers to Bitcoin, let's say, are buying Bitcoin ETFs, they might sell gold ETFs. And the gold ETFs are a lot smaller than total gold, right? So it's possible they could impact the gold price via the ETF markets more rapidly.
Before we dive into today's interview, I'd like to introduce you to our partner, Hive Digital Technologies, a publicly listed company building the next generation data center infrastructure with 100% renewable energy. Hive was the first crypto miner to go public and the first one to have an AI strategy. With over 2,600 Bitcoin on their balance sheet and operations in Canada, Sweden, Iceland, and Paraguay, Hive is fully committed to transforming communities, rebalancing the energy grid, and delivering value to shareholders with a low dilution and cash-focused approach. If you don't know Hive, check them out at hivedigitaltechnologies.com. Super interesting. You just mentioned something that it comes into like this broad paradigm shift that is happening in, the investment community. I think as we get the new generation kind of like getting more into, understanding, about Bitcoin, about digital assets, and also the old generation as well. They've been only investing as gold. That was kind of like the main investment as like safe an edge against inflation. And for example, in the UK this week, we had the first UK pension fund investing in Bitcoin. And that's really a major milestone. You see that traditional finance is actually now pivoting into this space that is not Wild West anymore. So it's quite interesting, your perspective. So you see kind of like more TradFi or, traditional investor moving out of assets like gold and investing into Bitcoin, obviously probably via ETFs, which seems to be probably for them the best product. And that way we can see the price going higher.
Yeah, I mean, I think people have been talking about institutional adoption, meaning things like mutual funds, pension funds, buying with, other people's money, but like professionally managed money funds. And those are quite big pools of money. And I think so far the actual institution adoption has been relatively small, and it's been more kind of retail elective investments. So what you mentioned there with the UK pension fund is, early, but if that increases, it could make a difference. And then I think the other point is the wealth management companies and brokerages are in many cases not yet advocating for or proposing a Bitcoin allocation to their advised clients, because they haven't, even though the ETFs are approved, they take some time to, develop a sales pitch, train people, and decide what they want to recommend, basically. And that a little bit of that's happened, but also not that much. So I think things move slower than people think in traditional finance. So there's a lot of follow through to come as well.
But we are definitely at a tipping point. I do agree with you. And it takes time, even the FCA getting its head around digital assets and then advising brokerages. It's not like straightforward, but I think we are seeing already important moves. So listen, you are one of the Bitcoin pioneer. You have been contributing to the technology underlying Bitcoin. So there will be some people in my audience, especially Gen Z, they might don't know you, or they only know you by name, but they don't know how much you have done in the space. So can you perhaps give us a summary of why you have dedicated so much work to Bitcoin, and especially because that's the difference that I see with you than with many other people. So I go to many conferences, see a lot of people like super excited about making money and, promoting that project and that. And not many people that actually are builders. People, they are behind the scenes, right? They are well known and they keep building steadily because they believe that Bitcoin can change the world and can definitely empower people first and deliver a better world for everyone.
Yeah, well, I mean, I was interested in potential of electronic cash with some of the earlier schemes that predate Bitcoin. So, for example, there was DigiCash, which was using some technology invented by David Chaum, and that company was based in the Netherlands. So at the time, for the much smaller community that was interested in that was a very exciting technological development to see getting implemented and made available to individuals. And that was sort of a bearer electronic cash like concept, but not really investable in the sense that it was effectively what we would call today a stablecoin. You put money in, you'd be able to transfer it in a cash-like way which is sort of actually very anonymous and therefore unseizable in effect. So actually proper bearer cash. So, for me, when Bitcoin appeared on the scene, it fixed some of the centralization shortcomings of DigiCash, and but it had the same kind of potential to introduce a more sort of smart contract bearer electronic cash for the world. and an investment possibility because it's also a digital gold-like phenomena. So there were people historically interested in monetary reform, returning to a gold standard, but Bitcoin, I think, was the first that really brought that together. And so it has both things, the kind of bearer cash and the hard money, and therefore an investable asset as well, so that you can invest in the adoption, where with stablecoin, there wasn't really an investment. It was just, a functional thing.
So do you see Bitcoin as a store of value mainly, or means for payment, or both?
Yeah, I think it's both. I think it depends on the market because, in developed countries, Europe, UK you mentioned, and North America, etc., Japan, other kind of developed countries in the world, they don't really, people don't really have that much problem getting access to to transacting. So, they have debit cards, bank payment apps on smartphones, and maybe they're not really feeling inflation that much either, right? So whereas the emerging markets, people don't have a bank account, maybe they don't have enough documentation to get a PayPal account, so they're sort of disconnected from the global economy. So for them, Bitcoin becomes a very amazing thing, a way to get connected to the rest of the world economically and participate in the global economy. And I think it's a bigger effect than people realize because about 50% of the global workforce is in the informal economy, i.e. cash-based, no documentation. So it's quite different from the experience of people in developed countries where the informal economy is a lot smaller. So yeah, you see a lot more payment adoption, means of payment in emerging markets, and more saving. Now, I think what a lot of people who take an interest in saving and investment will tend to do over time as they get more interested in Bitcoin, more into the rabbit hole, is they'll start thinking about their savings in terms of Bitcoin, right? So almost the unit of account for savings. Like if their investment strategy results in more Bitcoin than they had last year, they'll consider that a success, and they won't really worry that much if Bitcoin went up or down in a year. But if they have slightly more Bitcoin, they'll be happy, right? So that indicates that this sort of relaxation about a short-term price and more about accumulating more Bitcoin is saying that they believe in the far future and the short-term price is unpredictable. So yeah, then I think it's another metric, which is, are people denominating savings in Bitcoin before they're denominating, actual payments, because Bitcoin is volatile versus national currencies, right?
How many Bitcoin should I have to feel safe in the future? So if I think a lot about my pension, right? Many people, they don't have the opportunity to have a pension, right? Or they choose to don't have a pension, or they want to think about their pension in, different ways. How many Bitcoin I need to accumulate to feel safe, for my future when I'm old?
I'm not sure. I think when people first get involved, they feel like they're late to the party. I did in 2013, I heard about it in 2008, of course, but didn't really get actively involved until 2013. And of course, at that point, there had been people involved for 4 years, right? So it felt, 3.5, 4 years, or whatever. So it felt kind of late. But I think it's still quite early for Bitcoin because while we are excited about it and talking with other people about it, the number of people in the world with with interest in it or holding Bitcoin or using Bitcoin is still relatively small. And as we've said that, a lot of assets are not actually in private, direct investment management. Not that many people are traders or make manual, self-investment decisions. They might have, a pension fund or a savings or a mutual fund or something, or have an independent financial advisor manage their assets, right? So a lot of assets are in that form. So I think that there's still a long way to go if that, kind of demographic of how money is managed and who it's managed by also adopts Bitcoin. So I think it probably doesn't take that much Bitcoin to be meaningful for, like a retirement plan or something. You can just see that there's a lot more people than Bitcoin in existence, right? So a couple of years ago, I was hearing that the number of UTXOs, i.e. visible coins on a blockchain that had one Bitcoin in them had reached 1 million. And so I was sort of thinking, that's interesting milestone. There are a million people that have, accumulated by saving over a long period of time, one Bitcoin. And I was thinking, oh, that'd be interesting. Then, what's the next target? Can 10 million people get one Bitcoin? And I realized that's probably not possible, right? Because as more people buy it, they push the price out of reach. So I think if you look at it from that point of view, one Bitcoin is already an enormous amount of ownership compared to the number of people in the world, right? So
you said we are not late. We are still very, very early. Completely agree. Now, one of the things that is very interesting, but also equally important to mention, is the experimentation and the innovation that has been happening in Bitcoin, especially. I will say, well, obviously much better than me that I just got in the space in 2017. Innovation has always been there in Bitcoin. But what I feel like is that in the last couple of years, we have seen kind of like a ramp up of innovation, experimentation in the space. I mean, with ordinals, layer twos, runes, there's been so much like happening that you can actually think that Bitcoin could become the language of the new financial future, right? And obviously with Blockstream, you are focusing on Bitcoin infrastructure. So I was hoping that you could share some insight or how you see these, all the evolution in the Bitcoin ecosystem, and also what are you mainly excited about or focus on, and then where you see we are going.
Yeah, so it's common for network technologies to be developed in layers, or even software systems. Software in a laptop or a smartphone has layers. And the original Bitcoin was really one layer, right? You broadcast transactions on the main chain, and they're received by all users. And so it uses, it's not a very scalable approach, where scalability means that as you add more users, how much more resources are consumed, and are there resource limits? And so if the data is broadcast, as more and more people start using it, it uses up a lot of bandwidth, and because, get 1 million users sending a few transactions a day, it starts to add up, right? And then you get to 100 million and it gets more difficult. So then, as with other networks, there are layers on top that are specialized to different applications. So Lightning being the first one that people will be familiar with. And it's quite interesting because it's, as well as being more scalable and lower cost, it actually gives a better experience, a better user experience for the use case it's designed for, which is sort of retail payments and micropayments, like, to give a tiny donation to indicate that you liked a social media post or something like that, right? So these kind of very tiny micropayments, or just retail payments, things that people would use cash for, or a debit card or a payment app just to buy something in a store or what have you. So those kind of applications, Lightning is actually proven to be a much easier to use because it's faster. Like it feels like you are able to complete a transaction and have it be final within a second or less, kind of, right? So, and then there are other layer 2 initiatives for potentially other applications. So Liquid is adding for people will use technology for whatever they find interesting, right? You can design it with some application in mind, and people might use it something you didn't expect, and that's good in a way because it means the market will discover and tell us what is useful and what there's demand for. But one thing with Liquid is it's unlike the Bitcoin chain, which is focused on the single asset Bitcoin. Liquid supports natively user issued assets like stablecoins or shares in a company, bonds, all kinds of instruments, but still focused on like transactional uses. So I think if you look at the Bitcoin technology, the blockchain part of it, it's a very cool new form of accounting for value transfer, which kind of gives better immediate finality and in a trustless way. So there's no intermediary you have to trust to tell you what's final, or no scope for undoing transactions either, which is how it's sort of bearer and final. So those properties are also quite interesting for shared transactions, stablecoin payments, other kind of things like loans, promissory notes, bonds. So you see a lot of those things are liquid, like MicroStrategy shares in a tokenized form. Now, of course, one complication with shares is in most countries by regulation, there are restrictions on who can buy some kinds of assets, right? Some types of investment are only available to people in a given country. That's quite common. I think the UK and the US, for example, sometimes has different rules. And so you'll see products that are not for the US or not for the UK. Like it goes both ways, right? So those kind of restrictions need to be accounted for to make those kind of assets available. And so with Liquid, we have some sort of middleware that's not actually in the blockchain, but it's a simple way to enable people to enroll to get access to some types of financial instruments. So, and then once they have it, it gives a very Bitcoin-like experience on a liquid network with a liquid wallet, and there are quite a few different liquid wallets now. For trading, there's SideSwap and TDEX, and so on SideSwap you can do a kind of trustless trade between MicroStrategy and Bitcoin, or soon between MicroStrategy and stablecoins. So, and that sort of Bitcoin-like experience, because SideSwap is a wallet application, desktop and mobile. So you can put trading orders there to buy if it falls to a certain price, that kind of thing. But you can also just transfer these shares to somebody else who's enrolled. So you could split a lunch bill by paying somebody, 100, a few hundreds of a MicroStrategy share or something like that.
Oh, that's cool. So kind of like, just so for the people that don't know about Liquid, it is a Bitcoin layer 2 that it's not just really for payment. What you are telling me is really building a is for financial transaction as well. And capital markets is kind of like giving you the opportunity to access capital markets as as an investor, as an individual investor.
Yeah, I mean, it just gives a different experience to how people would interact with E-Trade or Interactive Brokers or one of the trading platforms, where there you have a kind of website login experience. You sign up and then you transfer money and then you trade on there. And you don't really have custody of your shares, where with something like SideSwap, it feels more bearer, like you can see the coins are in your wallet. Now, there is a share registration agent that is keeping information about ultimately which wallets are transacting. When you enroll, you can connect a specific wallet to enable you to do a transaction. Ultimately it gives a more digital cash-like experience for these types of assets, and it lets you do different things with them. I mean, you can transfer shares between brokerage accounts, but it's pretty slow and manual. Where here you can upload or deposit this kind of digital share certificate to a platform, or you can withdraw it, or you can transfer it like OTC, i.e. just with another person for cash or in person or to pay for something. So it gives potential for more types of innovation. And, with the SideSwap marketplace, there's no kind of exchange custody. So there's a central order book managed by SideSwap, but they don't have custody of the shares. So basically, when you place an order, I mean, maybe if we use like Tether stablecoin and Bitcoin as an example, because the same markets work for that, you're placing a limit order to buy Bitcoin if it falls a little bit, let's say 75,000 versus 76, and your wallet signs that order, and it's only that signed order that goes from your wallet to the SideSwap order book. And so, even if the SideSwap order book was hacked, the worst that somebody can do is pay the asking price, because the actual, Bitcoin and Tether stay in the individual traders' wallets. So it gives this kind of improved way to build a Bitcoin exchange, basically. And the same technology can then apply to, all the other kinds of assets that people can issue using this, like shares and so on.
So basically, the user will store its assets on his wallet. That's where they're going to stay. So there is no risk when transacting of third-party custody. That's really interesting, because it's kind of like enabling you to use any assets that you have, which could be, for example, shares, but I guess, in the future, more things could be tokenized as a mean of payment.
Mm-hmm. Yeah.
by going back to the beginning of the history of money in a way, where I could give you a pig, you could give me.
Right. Well, I mean, it's just I guess it's an example of the sort of adoption of newer technology. So, originally, I guess, well, not originally, but at some point, all the share certificates were paper,
Yeah.
and if you bought a share, they would send it to you in the post, the share certificate, and this kind of thing, right? And then that became digital, and so this feels like the next stage, which is it's not just digital, but you can hold it yourself, and consequently, you can do things much faster without waiting for somebody at a brokerage to manually process
And to pick up the phone.
something.
Exactly. I think that's important. Right. So my question would be, so one of the things, let's finish that up because I think it's quite important. So transparency is obviously great, and that's something that obviously Bitcoins, but blockchain in general kind of offer the ability to kind of like track transaction, and that's great. At the same time, we have got the point about privacy that is all equally very important, and people don't want to tell everybody how much money they have got, how much money they spend for that. They want to protect their identity, which is another big asset that people have, and they want to protect. So how are we balancing with this innovation on Bitcoin, the element of privacy and the element of transparency, and how that is possible?
Yeah, so Liquid actually has another difference from Bitcoin, another innovation, which is confidential transactions, which provides different privacy balance. So a bit more, well, as the name suggests, confidential way of transacting. So on the Bitcoin chain, if you see a transaction, you can see the amount, and there's an amount and a change, and it tends to link coins together as well. If you have to spend 2 coins, they can see that they are both being used to spend. So it's a bit ambiguous, but it does tend to leak information, and the amounts are visible, which is not great in terms of, if you pay for something and the person can see basically, the size of the coin that's in your wallet. So it's like, you used a £50 note and you broke it. So they get to see that here. So with Liquid, that is solved. So the recipient doesn't see the size of, doesn't see the amounts. They only see the amount that they receive, and somebody outside the transaction can't see anything. They don't see, how much is being transacted, how much is transferred, or how much the sender and receiver had in their wallets or anything like that. And actually it extends a bit further because Liquid has other assets, stablecoins and shares and so on. If you look on a block explorer, so another person also can't see what type the asset was. So they can't tell if that was a Bitcoin payment or a stablecoin with Tether or a share of MicroStrategy. So they can't tell what happened really. But the other point, sort of the other innovation with Bitcoin is that the blockchain is verifiable. So everybody can check that the ledger adds up, and so they can trust it. And so Liquid, what makes this confidential transaction technology a bit counterintuitive and hard to understand is that it's still able to be verified. So it's using a form of encryption, which means that you can still add things up. So somebody who's running a full node, their node will say, well, I can't see what that was, but I can verify that it adds up. So, the same number of coins went in as out, minus, you can see the fees you can see, but the rest of it is verifiable. So, if somebody had 5 Bitcoins and they sent 3, and there was 2 sent back to themselves for change, the full nodes on the network would be able to verify that encrypted 5 is equal to encrypted 3 plus encrypted 2. They just wouldn't know what the values are. And so the fact that you can build that kind of encryption enables it to still be trustless and verifiable, even though you can't see it. And then, on the other side of it, the parties to the transaction can see what they need to see. They don't see how much the sender had, they see how much they received, and they can verify that, and they can prove it to somebody else too if there's a dispute. They can share the keys to look how much was transferred in this transaction. They can share that with a service provider or their accountant or whatever they need.
Yeah, that's where I was gonna go. So it's all possible to be shown where is required, maybe by the government or by kind of regulation. So tell us, what are all the things that you can do with Liquid? So you mentioned about you can do some payments, you can trade, you can buy Bitcoin as well.
Yep.
Okay. What else?
So it does, as an example of technology getting, people finding innovative uses for technology. So there's some new services that provide an atomic swap between Liquid, Bitcoin, and Lightning. So you can sort of transfer Bitcoin from the main chain into Lightning or into Liquid. And so this company called Boltz Exchange has made a trustless swap from Liquid Bitcoin to Lightning Bitcoin. And it turned out to be, I think originally it was just intended to be a faster, cheaper way to do it, because their previous service, which they still run, is swapping main chain Bitcoin for Lightning balances so that you can reload your Lightning capacity, that kind of thing. And Liquid was a cheaper and faster way to do that. But it's a trustless swap. And so what it's resulted in, so other people saw that technology and thought of a new use for it, which is that they can have a simpler Lightning wallet. So they make a Liquid wallet, and then they use that Boltz exchange to convert Liquid Bitcoin into Lightning when they want to pay a Lightning user, or when they want to receive a Lightning payment. They send, the Boltz Lightning address to the recipient. The recipient pays that, and then the Boltz exchange, in a trustless way, sort of atomically swaps that for Liquid Bitcoin. So you end up with a kind of a Liquid wallet that feels like it could be a Lightning wallet too. But of course, it can do, Liquid stablecoins like Tether on Liquid. You can make a payment with Liquid, but you can also interact with Lightning wallets. So that wasn't something that somebody planned for. It's just something that people found a novel use for. So you'll have things like that. So it could be that, now that type of wallet is growing in popularity. The original one was the Aqua wallet, but now there are, I think, 4 or 5 in total. As Bull Bitcoin has changed their wallet to work this way for Liquid and Lightning. Each wallet has it, and there are, there's a company that Breeze that makes APIs, so to help other developers integrate Lightning, and they added support for this kind of Lightning wallet as well. So it's, it then becomes available in even more wallets. So it's sort of becoming a new way to make a Lightning wallet, let's say. And so it means that Liquid is also increasingly getting used for payments, and it puts a Liquid capabilities in front of more people who are not necessarily interested in trading, but just in, using Lightning payments. And so that also sees more adoption for sort of retail and emerging market adoption of stablecoins on Liquid, actually, because of that phenomenon.
Super interesting. So it becomes like a key component of the payment infrastructure. That's kind of like what you say. Now, one of the questions that I have got is how we can keep the decentralized nature of Bitcoin as we are going towards mainstream adoption, and even with the ETFs, which obviously they are great, they kind of create centralization of power into Wall Street, right? And they keep growing. I think I had on the show recently Eric Balcuna say very soon, the amount of Bitcoin they hold will be bigger than what Satoshi has got. So they start to become like key players, and I wonder, how do you see the future moving? I mean, is Bitcoin not going to be manipulated by Wall Street and centralized?
Yeah, I mean, the way I think about the ETFs is it improves accessibility. So it enables people who are not experienced with the technology, or just prefer to make an investment in their brokerage account because it's simpler for tax planning and everything, right? It simplifies some things. So, but as you say, that has some implications, which is now the ETF manager has a responsibility to to handle policy and legal requests. that arrive at the ETF company. So in that sense, there is some centralization of how those entities deal with policy. But I think so long as a reasonable proportion of Bitcoin are in like direct control, then it stays decentralized. And I think the other thing is you see a similar thing with miners, that originally mining was a kind of hobby thing where people would, buy graphics cards or a few GPUs in their house. And now it's becoming very industrialized, right? So, but it's still decentralized in the sense that there are hundreds and thousands of miners. It's just that the typical mining size is bigger. So what you need is enough global diversity of where these things are being run, which countries, which operators, so that it's very hard for them to coordinate anything otherwise. And of course, miners typically are holding Bitcoin and trying to accumulate Bitcoin. So they want Bitcoin to stay as it is. So I guess the thing you've got to watch out for is fungibility. I mean, that's the risk point, meaning that all Bitcoins are equal. So that's a kind of concept of money, of fiat money even, that dates back hundreds of years. I presume other countries have such cases, but in Scotland, there was a case, 1500s or something, where somebody paid for something with high denomination banknotes in the post, and they got stolen somehow. And it turned out that he was worried about that possibility, so he'd written something on the note itself, so he could prove that when they would be returned to the bank after circulating, that those were his. So he tried to sue the bank to say, well, when these notes come to the bank, you've got to give them back to me. And so it went to the courts, and the courts said they couldn't give them back to him because it would cause money to become unreliable. Like, nobody would trust it because they would never know the history, and if the money they got, they could keep it, or if somebody else would say that, 20 transactions ago that was theirs or something. So that introduced the fungibility laws. So I think in practice, all of the fiat currencies have those rules. So Bitcoin needs that too, for similar reasons.
Do you think that having a Bitcoin reserve strategy, which is something that obviously the US is talking about right now, is going to change the game?
Yeah, I mean, I think, we'll see if they do it, but some other countries already have, right? So El Salvador, of course, most famously, but Bhutan has, I think, maybe the highest amount of Bitcoin per capita or something in government ownership, because the government there has been mining quietly for some years and announced it recently. So I think if more governments and sovereign wealth funds get involved and start intentionally building Bitcoin reserve in a similar way that they have gold reserves or foreign currency reserves, then, the game theory of Bitcoin, which means that all of the individuals and businesses using Bitcoin end up with this kind of mutual financial interest for it to be immutable and to keep its properties, we'll get to see that phenomena scaling up to even bigger players. So, it went from individual hobbyists to investors to public companies and a few governments. So it will just do more of that. And if there are multiple major countries with Bitcoin reserves, it will change. But it's still a bearer technology, and it's quite topical as well for gold reserves, because there are times, in times of conflicts, protecting the physical gold reserves, like in an invasion or occupation, is critical importance, right? Yeah. And so some countries have placed their gold in custody in other countries, and then those countries are not very quick to give it back on request, let's say. And so Bitcoin has some advantages with that, because it's easier to secure Bitcoin than physical gold. So I think it would still have the same game theory. People are relying on it, and topically recently with the situation in Ukraine and the sanctions that some governments put on Russia, they actually, some major governments actually seized for the first time sovereign assets of another country. I don't think that had ever happened before. So I think that has caused some changes. It caused probably China to sell US treasuries, to be very cautious, and more countries to be cautious about if their ownership is not bearer if it's held in the ledger of another country, that ultimately maybe they don't really own it and it could be seized. I think that pushes for, buying physical gold in reserves, for Bitcoin itself, actually, because that is, something that can't be unilaterally seized because the ledger is global.
It's interesting that you're mentioning that, because it's crazy how far Bitcoin is gone in just 16 years. And now, you can see why really it's much better for Satoshi to be unknown because otherwise it will create, first of all, lots of problem for him as well. So listen, is anything specifically that you are excited about beyond, beyond obviously Bitcoin being embraced by, more people? Now the US seems to be on site and supporting. From like a development perspective, is there any kind of innovation happening in Bitcoin, or you are working on, that you are particularly excited about?
Yeah, I think it's a very active area of development and research on more Bitcoin layer 2s, specialized to different use cases. And one thing that we've been working on at Blockstream for some years and is coming close to going live now is next generation smart contracting for Bitcoin. And so we're putting it on Liquid first. And the difference is that it's a sort of way to extend the functionality. So it's sort of self-extensible, so that you shouldn't need to change Bitcoin script afterwards. So for example, if Bitcoin had simplicity already, then when the Schnorr signatures were introduced, it wouldn't have needed a soft fork. It could have just been implemented directly. So it means that it becomes less necessary to make upgrades that require market consensus, which is hard to achieve, right? So, and the other point is that script system is focused on security and correctness. So it should actually be a more robust and secure scripting system even than Bitcoin's existing script, because you can formally prove things about the behavior of the script, which is important for contracts. It's quite common in other chains for smart contracts to have bugs, and then, they will lose some billions of dollars and then try to fix the bug. So we don't want that kind of risk appearing in Bitcoin related scripting. So simplicity is a potential answer for that. We're going to use it first on Liquids so that people can use it with real value, and maybe in the longer term it could be adopted by Bitcoin. It was originally proposed before Blockstream for use in Bitcoin, so it's just taken some years to develop that technology to a mature point so that it could be integrated into Liquids and potentially Bitcoin itself in the future. And I think some people are a little bit concerned about too much change in Bitcoin because it's a sort of risk point, technology risk, a security risk, and it's also complicated to, everybody agree on an upgrade and coordinate it, and that might get harder in the future as there are more public companies and governments holding Bitcoin reserves, then they'll start to care about that as well, right? So I think that's where the discussion about, having no more changes basically comes from. So this ossification topic, right? So I think simplicity could possibly be a solution to that, because you could then actually stop making consensus changes to Bitcoin and just implement everything else as extensibility upgrades. And you can still upgrade the software to improve the efficiency of new features, but it doesn't change the behavior and meaning of the contracts.
That's interesting. So it could be more, it will become like a solution that everybody could use, every kind of companies, businesses, individuals, without, you can kind of build what you want, basically, just utilizing Bitcoin as an underlining layer. Yeah,
you see effects of it because, for example, when Lightning was first proposed, it was realized that to make it work well, it would need one or two new opcodes. And so one of those was integrated, many years ago in the early period of Lightning. And then an improved version is still not integrated, right? So it means that some types of innovation then require opcodes, and then that requires, this kind of coordination and development and consensus building process. But with simplicity, people could more, try it, and the people that opt into it could use that immediately. So it makes a potentially faster pace of innovation, but still in a secure and safe way.
Super interesting. I thought that for some reason, I thought that AI would have played a role into this. Does it or not?
Well, I mean, so far not really, I think, because the Bitcoin system is really depending on, very deterministic security critical tests. So in a way, what Bitcoin is doing is very simple or very simplistic. It's just verifying that you are the owner, that you have the ability to sign for it, things like that. Where AI is more about giving some intelligent answer to a question. So I think you don't really want that kind of intelligence in the blockchain because it's less deterministic. Maybe it gives a different answer, or you can trick it into saying the wrong thing or something. So I think if things get too complicated, they become less secure, and the AI predictability is not so good.
Yeah.
Humans can trick it, I think. You see it where the AI systems are, sometimes biased or trained by the companies that develop them to intentionally not answer some topics. And then people just find a creative way to ask the question, and it answers them anyway. So it's quite hard to be certain about the behavior of an AI.
Interesting view. Adam, thank you so much for coming on the show and sharing this great insight with us. Thank you.
Yeah, thank you. Thanks for having me on.